All right, everybody, I wanted to do this video so that uh, I could recap and show you guys where we are on the daily. So this chart that we're looking at is the daily chart. Each candle represents one day. Here today is where is the price action. This white candle is today's price action. We had a bearish day overall. As you can see, we are coming to repair business within this green candle here. That's what the past couple days has been about. Coming to basically repair or facilitate trade within that candle. Anytime you get a candle with a big body, what you will notice is that price will go back at some point in time in the future, regardless of how long that is, and it will retrade in that price range. Same with wicks, they'll take out wicks. So who knows what we're doing? We can go down, and we could potentially, we bounced out of here. Who knows? We are here. We could go here, which is, these levels, and before we reject to send us back to test this, if we break through that, we can come down here and test this level. We could go back up to retest this level, come back down to retest this. If we fail, go out and take those wicks out. Who knows? It's all speculatory, right? I'm just speculating. But today overall, I did have a good day today. Put up about a little over $200 on the board, which is good. Last week was about defense, and this week is about offense, right? We had to play defense on the account so that we didn't lose the account. We only got $2,000 worth of risk on this account, and we lost about 1,000 of that, 995 the first day of getting the account, which is not good. So we had to spend last week getting that back, trading micros. We were trading 1 micro. All right. So today was overall bearish, as you can see from the start to the finish. So about 3 o'clock we were bearish. We opened up below the 20. Well, we opened up above the 21 EMA. Weak price could not hold above that, so we came down, establishing a low. We spent some time here until 10:30. So our initial balance was the high of the opening candle and the low of the 10:30 candle. After establishing this initial balance, we broke through the initial balance after spending some time at the lows. It pushed us back up into initial balance, and we broke back out of it. And from then on, we spent the rest of the day outside of initial balance and below the cloud, below the 21, which is bearish. All right. Until we get across here, which was a confirmation about 3:18 p.m. But before that, about 3 o'clock, we got this double bottom here, 254. So, somewhere around 3 o'clock, we got this big push up out of it. I was actually looking for that. I kind of seen this not so perfect inverted head and shoulders, but I had a long day today. I was tired, so I didn't do any more trading, but that's okay. I put up the trades that I needed to put up. I took a couple of losses, took some wins. Overall, we were green for the day, so I am happy with that. At the end of the day, we got some temporary relief. Now, speaking of temporary relief, let's go back to the daily chart, okay? Because what we can find potentially, this is not financial advice, is some temporary relief in these kind of markets. What kind of markets are we in? Well, we are in the kind of market where we have the death cross. And what is the death cross? The death cross is when the 50 EMA crosses below the 200-day EMA. And that happened back on April 2nd of 2025. So April 2nd of this month. The last time the death cross happened was right here. Nope. Actually, yeah. Yes. In March of 2022, right here. So you see that? It's when the yellow line, the 50 EMA, crossed below the 200-day EMA, which is the red line. So after that, as you can see, we were bearish. All right. So after that cross, we continued in a bear market. Now, temporary relief came here. We got a bounce here. Temporary relief came here. But if you notice, we were making lower lows. So we were in a bear market for about a year. So from March 2022 until the cross, the 50 got back above the 200, which was in March of 2023. So we spent about a year below the we popped back above it here for some temporary relief, but for the most part we spent about a year below the 200-day moving average after we got the death cross. So that is why I wanted to highlight that. This time in 2022, that came, after COVID and after the stimulus relief and inflation data, all of that was causing that sell off, right? And some other things within the economy. I'll leave that to you to go look that up. This time it is the tariffs, right? The trade war. And so we need these people to come to an agreement because the market doesn't like uncertainty. There's a lot of uncertainty in the market. And so what we have is the death cross. So I try not to develop any bias I try not to develop any bias, which is hard for any trader, right? In any market, but particularly in this market, even a bearish bias. But with that being said, because we have the death cross and we're in a bearish market where we're correcting, I do know that when we get moves like this, right, this big green candle here, when we get moves like that to the upside, right, when we get that bearish momentum, I do look at it as a form of temporary relief, and that will be until we come to some kind of agreement, right? And until that agreement sends us back above the 200, when the 50 EMA crosses back above the 200. Reason being is because, again, that is extremely bullish. Last time this happened, we spent about a year beneath the 200 EMA. So who knows how long it can happen. This time it could be who knows, 3 months, 4 months, 10 months, 8 months, a year again. It all depends on the people and the markets and the sentiment of the markets. So I just want to highlight that, and for you guys to all keep that in mind. So we may get some relief here. It's not financial advice. I'm not going to, go long or buy any calls or anything like that for the long run until, again, we see that happen. All right. So today was overall bearish. The market is overall bearish. We've been below the cloud since February 26th of this year. We've been below the 21 since February of this year. We tried to push above it here in March. We were rejected. So the same thing that we're seeing on the smaller time frames, we're seeing on the bigger time frames. You read them all the same. It's just the candles is different. So the amount of data that's in the candle is different. Each one of these candles represent a day. So this is what we're doing on the daily. We are extremely bearish. Overall, again, today was a good day. We took our trades that we needed to trade. We're going to be on tomorrow at 8 a.m. and we are going to remain patient. We're not going to force anything. We're going to take the trades. We're going to trade what we see. We're going to let the cycles form, and hopefully, get this account build up to where we need it to be to get payouts and have some nice cushion in there to start putting on some more micros. But for now, we just want to build it up, get some cushion in there so that we can trade more than one micro. There's no rush. It's a marathon, not a sprint. And that's pretty much that. I'll be on at 8 a.m. I will see you guys in the next one. Thank you for watching. Peace.